All right. Thursday, September 9th, 8:24 a.m. Eastern Standard Time. The morning stock market's going to be opening in a little more than 1 hour. And some things that we can get in the habit of looking at in order to be aware of what's going on in the market to have our finger more on the pulse of if it's going to be going down or if it's going to be going up, and just in general, if it is at a good price to be buying, or should we be choosier in acquiring paper assets at the moment. There's a variety of things to understand about this market. These things you probably know about other markets, like the vegetable market. You probably are innately more familiar with the vegetable market than you are with the stock market because you have been more exposed to the vegetable market, whether you realize it or not, all your life. You've been exposed to vegetables and interact all these different activities that vegetables take place in throughout society. And so that's something that's a lot more common than the stock market. And in fact, the vegetable market is not purposely influenced to mislead you, whereas the stock market is purposely influenced to mislead you. So, in learning this, just have a certain amount of trust that the stock market is not set up on your behalf, and it's up to you solely to really start understanding how to capitalize on it. Nobody else. It's up to you. And when you make that decision and that realization, and you're thinking about it that way, your mind is going to do better things for you to start putting this puzzle together innately. So, with that being said, one of the first things that's good to start being aware of is this Buffett indicator, right? And you can check it out here at the buffettindicator.com. And overall, this Buffett indicator is really, really high, basically saying the stocks are overvalued based on the Buffett indicator. So you can read through, there's a lot of information on how the Buffett indicator works, da 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 da. You can read through, you can debate people online about the Buffett indicator. You can do all that little micro stuff, all that minutia, and stop your whole learning process. Or you can just say, this is the Buffett indicator. Warren Buffett is a value type of guy. And based on the Benjamin Graham, Warren Buffett type of value investing approach, the stock market's overvalued right now. So it's just something to be aware of. Doesn't mean that it can't go higher, but just from that aspect of looking at this diamond, from that one facet of this diamond is overvalued. Another thing to get in the habit of looking at along with the Buffett indicator or before, right? You know, you do it right before, do them both at the same time because they're just looking up a quick look at an indicator is the MMRI, Mannarino Market Risk Indicator, and it works pretty well. So you can see these different colors here, and down here you can go down, and I like to take a quick look at this number and then find out what is this number in relationship to the last numbers of X amount of time. Mainly just like looking down. If the stock market is having a down day, here is like the Mag 7. And if all these stocks are going down and overall the market's going down, then I will take a look either at when that's happening or at the beginning of the day. I've already looked, and based on this, if this indicator is going down while the stock market's going down, or if this indicator is low while the stock market is low, that gives me a little different insight as to the risk of this down movement or potential risk of it. Whereas if this indicator is already in the red or is down here halfway and it's starting to move up and starting to move up rapidly, that's a different type of indication of what could be going on. So it's nice to have the finger on the pulse of both of these, and they both kind of do two different measuring the same thing, the stock market, in two different ways. This is looking at like overall value of company value. Maybe you could even look at it as income or earnings or revenue or something. The revenue of the United States, GDP versus the total stock market. And this is looking at the risk in the stock market as it's related to the debt market via the U.S. Treasury 10-year. And you can see right now it's at 4.13, and the Dixie, the US dollar in relationship to a basket of other currencies. What's really cool about this indicator is this is pretty complicated uh, things to understand, and this is an easy one number entry into that, because as you get used to looking at this Manarino market indicator, you'll probably scroll down and you'll realize like there's not too much on this website, and so you'll kind of dive into this. If you right in the beginning, you got like 2 or 3 sentences that is describing it. Right here, it's obviously talking about these numbers. You got the graph, maybe got a paragraph here. You got this guy's face, and okay, so that's there, and then unemployment. Now this maybe there's a better way to um, monitor this, because if you see what the date here, August 25th, August 2025, we're lagging behind. We're in September. So this chart is drastically lagging some of these other charts. This was updated October 9th. This was updated when? At least on this, we got October 7th being the lag. Like this one's really, really lagging. But this really matters because in these the reason why this matters is what Mike Green and the whole discussion around passive investing that I've been hearing Mike Green say for like 2 years or more. I'm not sure, but the idea of the effect of passive investing on the entire stock market, which in a real general nutshell is that when people are working, have jobs, and I think we'd have to listen to Mike Green to get a more descript, an exact, accurate answer of where in society are all these little or large factors contributing to the passive flows. But there's a certain amount of money that just gets put into the stock market on a monthly basis from these passive things, and they just buy no matter what, and they're just kind of buying the same names. And I'm oversimplifying the way that I'm describing this, but that concept and it has a lot to do, from my understanding, from just listening to it and learning, quite frankly, learning the armor course from the Cash Flow Academy. Uh, it just started kind of clicking to me that if unemployment is a powerful factor in the stock market, and people being employed really contribute to 401ks, and it creates this passive flow of money coming in, buying like buying an index or whatever they're buying, the money is being funneled somewhere. So if that money cuts off, and via a big spike in jobs, then that could have probably will it's going to have some sort of effect. Like how much money gets cut off would give us an idea of, and how much money has been going in, and what has that kind of been doing to the market, would give us an indication of if we could see some sort of pullback, or if there is a pullback, is that pullback going to be weaker? You're playing a game where you're playing a game that can there's we're playing a game where we're looking at things that can only go one of 3 ways. And this is what's so beautiful about the stock market, is that since it can only go one of 3 ways, it's relatively easy to plan for anything happening because there's only three plans. It can go up, it can go down, and it can go sideways. And what I mean by sideways, the general area this price was in on the beginning of 30 days ago is in the same spot now. It generally has gone sideways, even though during the time frame it went drastically down. Like that's a big pullback in this short amount of time. But you see, it also went up here, had a little pullback here, and went up here, and and so. But overall, we're back to around the same place. Like we're in between 62 and 63. So it's basically went sideways. So something can go up, down, and sideways. And our skill, it can be expressed through how well we're planning for any of these up, down, or sideways movements. And we are profiting from them and looking for ways to continuously profit in our accounts from being aware of the different directions these assets can go and being aware of different strategies to implement so we're in a perpetual state of profiting and or yeah, just profiting. But when I say profiting, it doesn't mean that every day there has to be a profit. In the process of profiting, you could say you're profiting and or you're waiting for a profit. Your patience. There's times where you have to express what Master Trader calls SOH, sit on hands. You don't do anything. And if you are working a full-time job, it's a lot easier to sit on hands if you're not in front of a computer. And then the more you are in front of a computer, you really want to realize that you might get itchy trigger finger, and just means that you want to do something. At those times when you want to do something, taking out the paper trade is probably the best thing to do in the beginning, or buy one share and or a low amount of shares to kind of see what's going to go on and measure things. And so we're looking, let's look really quickly over here at the Mag 7. So this is 1 day, 3 months, 3 months from left to right. Each green or red box is 1 day. And overall, we see it's kind of been going up the last week or so. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, almost 2 weeks. We kind of got into the sideways range, but on a 3 month time period, we've been up. Amazon, sideways, basically in the sideways range for the last 3 months. And Microsoft, that's pretty close to sideways. I mean, it's trying to go up, but it's also, kind of got the sideways, kind of up in a larger sideways range. Nvidia, kind of more pointedly looking as up, but it's went into the sideways range in here during this time. So it was like strongly up through here. So we can see like the big distance between these two moving averages and this 200-day moving average. I think this is a 9 and a 20. The huge, actually is a 4, but we're on yeah, it's a 4, a 10, and a 40. And but this huge, okay, so 40-day moving average. I think this was weekly time frame before, and I changed it to daily. It didn't change the moving averages, but that's totally okay. So, anyways, we just see this big gap between these moving averages, and now this gap now, and they're kind of intermingling here. And our 40-day moving average, which was at a really high pace, kind of um, sidewaysing out here. So it's easy to see when we look at it from that manner that it's gone into the sideways range through here, with this kind of being the low, and right now this being the high of the range. And and then overall in this 3 month time period, we see Netflix has gone down in a 3 month time period with quite a bit of this being in the sideways range here, and Meta sideways, Google up, Apple up. All right, so we went through all of them, and what can we quickly, now that we've gone through all of them, there was only one in a 3 month time period that was showing going down, and that is Netflix, right? We're here and over here, and it's not even really going down that extreme. And we look at that 40-day moving, is this a 40-day? Whatever, this red one, it's either 40 or 200-day moving average. Let me take a quick look at that. Okay, 40-day, and this, yeah. Okay, the 40-day moving average is kind of moving sideways to down, and we see our moving averages cross through here. But this sideways realm, it's like it's not a major down. And when we put it in the context with we got one, let's just call this a down. So out of seven, we got one down. And how many sideways do we have? One, two, three, three sideways, and three up. One, two, three, three up. So we're like kind of neutral in a way. We're kind of overall, I wouldn't be surprised if we I wouldn't be surprised if we go sideways, break down, or break up. There's only three ways it could go. So I wouldn't be surprised. So just being prepared for any of those things. And if you're completely new, consider consider learning on one share, just buying one share. And I will show you this. Here are six stocks that I am actively trading. I'm somehow actively trading these. If there's a way to put a position on these, then you should just think that I'm looking at any and all positions I can put on any of these stocks. And generally, what's been going on is I've been taking long based positions on on these stocks. This is we are looking at a 1 hour, 1 day. Actually, from left to right, it's going to show you a little more than 1 day though, because this is after hours or between days. This is Wednesday, the trading day here, this dark black. And this grayer area is times when the market is not open or it's in extended hours, after hours, whatever the appropriate name is for that time. That's what this is. And so I am getting really in tune with these six stocks on an hourly basis. However, I watch a total, I have been watching, let me pull it up. I have been watching these also on overall. I watch these as well on an hourly basis. However, when the stock market opens, I switch this over to the daily. Now it's 3 months. I start at 3 months. Yeah, 3 months and 1 day, and then I'll start zooming in. So right now, when the market's maybe around 9:15 or so, I'll start zooming these in. And depending on a variety of factors, like I might for so this is the S&P 500 via SPY, expressed through SPY. And a lot of times I'm going to zoom in double on it, but sometimes I'll just zoom in one and then we'll go from there. So like for today, right now, what I've got going on overall, the market overall has been going up slowly, kind of surely, but it's been going up. So, and I don't really have any positions that I'm super concerned about with what the S&P 500 is doing. So just having it like this is good. And it's just hit a high. More than likely, it's gonna kind of keep going up until we see some big change with things. And then the VIX, a lot of times I'm going to automatically just zoom in twice to get an idea of where it's at. But sometimes it's nice to be zoomed out a bit to make sure I'm understanding where is this number at in relation to where the number has been in the last 3 months. But I'm pretty aware of that lately, so I'll just zoom in one, maybe two, depending on maybe as the day gets closer, I'll zoom in a second one. And actually, this actual chart when the trading day is going to be happening is on a completely different computer. So it's not even on this computer here. And anyways, this one I do a lot of now. I do a lot of naked strangles, short naked strangles on it to the point that, let me see, that um, I have this up, this ready to be looked at anytime. So it's now on a 3 hour, 10-day, 3 hour, 3 days, 1 hour, 1 day, 15 minutes, and 1 day, 5 minutes. So I'm looking at I'll kind of monitor it here, but if I need to get more surgical, then I will come and I'll pull that this up, which also you notice has crowd. And to take a quick look at how thinkorswim works, see this is green 4 symbol link. It's green, it's green, it's green, it's green. See this is blue, 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 blue. Over here, nothing, nothing. So there's ways to link up. So I have these 4 linked if I want to change these out. But for the most part, I'm using these 2 stocks on a weekly basis. So right below now, I've got crowd, and you see I got the line here, and over here you can see I have 3 of them. I don't have a position going on crowd at the moment, but I'll leave these there because I'm always looking to put positions on and have positions on. I'm always looking to be making money out of these 2. So I might zoom in here, and then IBIT is right next to BTCI. This is the one that I'm actively not trading. I'm actively acquiring for the dividends. And I look at both of these though just as a representation of Bitcoin because it's not Bitcoin. These are derivatives of Bitcoin, but with 2 of them here, and I can overall look at a daily chart of 3 months and see how close they are to how close they are in moving. And then what I'll do is I'll pull up Bitcoin futures and kind of not kind of actually take a look at that in relationship to those. And I noticed whatever Bitcoin futures are doing will have a impact on the direction of these 2. And because the Bitcoin futures run longer in the market hours, when these are closed, I can be looking at these and looking at different trades that I might want to do different setups on these. So that's a good thing to be doing, not just with these tickers, with anything. Maybe you want to do this with ExxonMobil and some other type of oil stock and use the oil future as your the thing you're weighing it on. And I do that. And it's the same thing for gold. Like the gold future, where did that? Got the gold futures in there. Here they are. Gold, silver, Bitcoin, oil, stock markets, dollar, and the VIX. So those are all, if possible, they're all like the dollar is the Dixie, but everything else are futures. Besides, even the VIX was the futures of the VIX. And some of these in here, like Tesla, ASTS, SMCI, and Palantir, and Hood, and Gold. Those are also, those ones are here. So monitoring, monitoring them. Man, there we go. Monitoring them here on a daily, on a different computer, so it's on a completely different screen. It'd be over on the side. The screen that we're looking at is my center screen, and I have another to the left of that. I have a computer that's running the center screen, and to the right of the center screen, I have a completely different computer with no other monitors hooked up to it at the moment. And so I'm looking at this. I can easily see with a look to my right, I can see the stocks that I tend to watch. This one I'll switch if I want to take a look at AG, which I do have a position on. Um, I got to look right there. And then I don't worry about switching it back because it's saved under the Okla one. But I'll use this one to just check other random stocks that I might want to check. Like, well, I found living in the backwoods sometimes is not the most convenient for the internet. Anyways, so that's what I have uh, set up. So yeah, watching these and like today I have I've already established a very small position, a long stock position on ASTS. So I'm gonna watch to see if it's gonna hit my price target for that, and then I have options that are active options, open positions that are all short options, short puts, short calls, strangling different stocks. Some of them, because I rolled them, I'm closing off these rolling positions. So some of them might not be a full strangle. Some of them might be just a put or a call that got rolled. And but there's a chance that they're on these stocks. Like I'm actively trading. See down here, I've got stuff going on uh, over here that is a different way of going long. So some of these stocks, it would be accurate, it would be misleading, but still accurate for me to say I'm long Palantir at $35, which is true. It's actually true, but it's misleading because you would probably think that means I bought shares of Palantir at $35, but that's not true. I did not buy shares of Palantir at $35. I did something else to become long Palantir at $35. And I'm not going to tell you what it is. I'm not, because not only am I long Palantir at $35, but also the return on buying power is like 150%. It's a really, really an incredible trade. It's really incredible. Actually, maybe the 150% return like is on Hood. Maybe that one's on Hood. And maybe this one was like a over here like a 40 or 50% return. But these strategies, some of these strategies are really, really high return on buying power, and some of them are relatively low. But when you combine low and high return on buying power, and you're doing it consistently, it's like a lot of the low ones. If the low return on buying power strategies are within a 7 day time period, and you consistently do these, there's 52 weeks in a year, and there's about 7 days, right, in a week. But in the trading week, there might not be 5 days, right? Two days are closed for the market to be open. So your 7 days in a week is now down to five of trading. And if there's a holiday or something like that, and it's not a tradable day, then you're getting shorter than that. So let's just keep things kind of easy and say there's 52 weeks in a year. So if you trade every close to every week the market's open, and let's say you're getting a low return on buying power, but that low return is annualized by let's say you get 40 weeks out of 52, and some of them a lot of data, just try to be pretty conservative. Can you imagine if you're getting 2%, um, around 2 maybe 3% a week, or 1.5% sometimes, 1.5 to 3% a week over 40 weeks annualized, plus really big 40%, 30%, um, sometimes 70%, in this case 150%. return on buying power over a longer period of time. So it is very possible using Thinkorswim to create a wonderful, wonderful financial situation for yourself over time. That's the big thing is that it takes time. It really does take time. You're selling time, and time is on your side. Yes, it is.